Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, December 5th, 2025, we are zeroing in on the NZDUSD currency pair, a fascinating cross that's currently at a pivotal juncture. Major developments in global central bank policies are significantly influencing its trajectory, creating both opportunities and risks for traders. Let's begin by establishing the broader context on the daily chart, showing all available data. The dominant theme currently is the contrasting monetary policy outlooks from the U.S. Federal Reserve and the Reserve Bank of New Zealand. Starting with the U.S., the dollar has been facing considerable pressure, primarily due to strong market expectations of a December Fed rate cut. Reports from FX Street and Reuters indicate an overwhelming 85 to 89% probability of a 25 basis point reduction at the upcoming meeting. This dovish sentiment is largely fueled by recent softer U.S. private payrolls data and a cooling labor market. Traders are eagerly awaiting Friday's U.S. Personal Consumption Expenditures, or PCE, inflation report, which is expected to provide further clarity on the Fed's next move. A hotter-than-expected inflation reading could challenge these rate cut bets, potentially strengthening the U.S. dollar in the short term. On the flip side, the New Zealand dollar is finding renewed strength amidst these global shifts. The Reserve Bank of New Zealand recently implemented its own 25 basis point cut to the official cash rate, bringing it to 2.25%. However, crucially, the RBNZ has signaled that this may mark the end of its easing cycle, citing early signs of economic stabilization. This divergence in monetary policy, where the Fed is expected to cut further while the RBNZ pauses, is providing a significant tailwind for the NZD. Forex.com highlights that NZDUSD has broken free from its September downtrend, clearing the 50-day moving average and the 0.5755 resistance level. This breakout suggests a potential shift towards a more bullish outlook for the pair. Now, let's integrate this fundamental news with the price action visible on our one-day chart. Observe the prominent bullish candle from November 26, 2025, which corresponds precisely with the RBNZ's announcement signaling an end to its easing cycle. This strong move decisively pushed NZDUSD above a noticeable downtrend line that had been in place since September, confirming the breakout mentioned in the news. The 0.5755 level, previously a significant resistance point, was clearly breached during this rally, now acting as a crucial support zone. The price also moved above what would likely be the 50-day moving average, aligning with the bullish technical analysis we saw earlier. Following this powerful ascent, NZDUSD appears to have entered a period of consolidation, with volumes showing a decrease compared to the higher activity during the breakout. Currently, as of December 5th, the pair is trading around the 0.5770 mark, slightly above the last full daily candle close of 0.5755 from yesterday. This confirms the sideways action reported by Traders Union, with the pair seemingly range-bound between 0.5666 and 0.5790. A critical resistance level to watch on this daily chart is the psychological 0.5800 mark. Should bulls overcome this, the next targets would likely be 0.5843 and potentially the longer-term 200-day moving average. Conversely, if sentiment shifts, immediate support can be found at the established 0.5755 level. Switching to the one-hour chart now, we gain a more granular perspective on the recent price action, particularly since late November. Here, we can clearly see how the initial strong upward momentum, driven by the RBNZ news, has transitioned into a more range-bound or sideways pattern. The 0.5790 level, specifically highlighted by Traders Union, has emerged as a clear short-term upper boundary, representing solid resistance. On the downside, support has been found consistently near the 0.5710 to 0.5720 area, defining a relatively tight channel. The last few hourly candles confirm the pair is currently hovering around the 0.5750 to 0.5770 range, reflecting the delicate balance in market sentiment. Volume on these hourly candles remains moderate, suggesting that many participants are on the sidelines, awaiting the next significant catalyst, such as the upcoming US PCE data. Let's zoom in even further to the 15-minute chart to analyze the very short-term price movements over the last couple of days. Here, the localized sideways consolidation around 0.5750 to 0.5770 is even more distinct, characterized by small, choppy oscillations. This tightly confined action indicates that short-term traders are actively engaging in range trading, looking to buy dips at minor support and sell rallies at minor resistance. The 0.5750 level is frequently tested, suggesting it's a highly active area where buyers and sellers are fiercely contesting control. For those looking at intraday trades, a sustained break above 0.5775 or below 0.5740 on higher volume would signal a potential short-term directional move. The lack of strong conviction in either direction underscores the market's anticipation of fresh economic data. Now, let's consider the reasons to be bullish or bearish for NZDUSD and at what price points. The primary bullish argument rests on the significant monetary policy divergence, a dovish Fed versus a hawkish-leaning RBNZ. If the upcoming US PCE inflation report confirms a cooling US economy, it will solidify expectations for Fed rate cuts, directly supporting NZDUSD. Technically, the recent breakout from the September downtrend on the daily chart suggests a shift in the overall trend, indicating a strong foundation for further upside. Improved global risk sentiment would also typically favor the risk on Kiwi, pushing it higher. For long-term traders, consider initiating long positions on any dips towards the 0.5755 support level, with a stop-loss strategically placed below the recent low around 0.5666. Potential long-term targets could extend beyond 0.5800, aiming for 0.5843, and eventually the 0.6000 area as suggested by some analysts. Conversely, the bearish case hinges on several factors that could quickly reverse the current bullish sentiment. The current sideways action and overbought signals noted by Traders Union suggest that NZDUSD may be due for a pullback or extended consolidation. A hotter-than-expected US PCE inflation report on Friday could significantly bolster the US dollar, challenging current Fed rate cut expectations and applying downward pressure on NZDUSD. Furthermore, any negative economic news emanating from China, New Zealand's largest trading partner, could weigh heavily on the Kiwi. A failure to sustain price action above the critical 0.5755 daily support level would be a strong bearish signal, potentially leading to further declines. For short-term traders, if the price breaks below 0.5740 with conviction, a quick move to test 0.5710 or even the daily 0.5666 support is plausible. Long-term traders should reevaluate their positions if NZDUSD decisively closes below 0.5666 on the daily chart. To recap the important price levels, NZDUSD is currently consolidating around 0.5750 to 0.5770 after its recent bullish breakout. Immediate strong support is identified at 0.5755, derived from the former resistance level. On the upside, immediate resistance sits at the psychological 0.5800 mark. A sustained break above 0.5800 could open the path towards 0.5843 and potentially higher targets above 0.6000 in the medium term. Conversely, a sustained break below 0.5755 could lead to a retest of 0.5710, with deeper support at 0.5666. The likelihood of an upward continuation is moderately high, perhaps around 60 to 70%, if the US PCE inflation report on Friday confirms a cooling US economy and strengthens Fed rate cut expectations. Conditions that would reinforce this likelihood include continued dovish commentary from Fed officials and robust risk-on sentiment. However, a surprisingly strong US PCE report could quickly shift this balance, making a downside move towards 0.5710 a 30 to 40% possibility. Always look for confirmation from volume. Higher volume accompanying breakouts or breakdowns provides stronger validation of the move. For upcoming events, the US PCE inflation data is undoubtedly the most critical to watch. Please remember, this analysis is provided for educational and informational purposes only and is not financial advice. Trading involves significant risk, and you could lose money. Always conduct your own thorough research and consult with a qualified financial professional before making any investment decisions.